Hello, and welcome to the Wade Borth podcast. I'm your host, Wade Borth, and in every episode, my goal is to get you to think differently about how money works and ultimately to empower you to take control of your money and your personal financing system. Hello, welcome back to the Wade Borth podcast. Today, I have a really good friend of mine. He's been on the show before, and we had a chance to meet up in Orlando earlier this year. And I always love my conversations with Curtis. Curtis May is a man that's got tremendous energy, tremendous insight, loves what we do. There's a passion there that I cannot explain until you have a chance to sit down and visit with him. So what I thought I would do today for the people that listen to my podcast is give them a little flavor of Curtis May. So welcome, Curtis, and thanks for joining me.
Thanks for having me. Always fun to talk shop.
So Curtis and I are both passionate about infinite banking. We're both passionate about whole life just in general. And we were down at a industry symposium, industry meeting called Circle of Wealth. Don Blanton's organization and Circle of Wealth. Man, I've been doing that for, almost 20 years. How about you?
Yeah, about 15.
15?
Yeah.
So, yeah, it's fun because you get to see a lot of
people. Let's say 12. Let's say 12.
Okay,
now I think about 12.
But I get more energy. What we were talking about earlier is like we get as much energy or more energy talking with each other in the hallway than we do from what they're teaching up on stage. But just because you can find like-minded people. So
absolutely. Like you guys that are listening, like you can't expand your own vision, right? So you got to, there's another event we got to go to before we start recording. Wade was selling me on because I didn't feel like going. And I think I'm going to go away. But he was telling me on why I need to be there and get in a room because you never know who you meet. You'll never know what, it just only takes one idea if y'all are in business to change viewpoint can change your life. And that's critical. So.
Yeah, that's a great point. One idea can change your life. And how do you get those ideas? You don't get those ideas by being insulated from everything else. So that actually kind of led me to a little bit of, when we were at Circle of Wealth, there was a gentleman up on stage, and I think everybody knows my stance. I love whole life because I love the guarantees. I love what it does. And I love the certainty it brings to my clients, to myself. I don't have to have a conversation 15 years from now, 20 years from now, like, hey, sorry, it's not performing like we thought it would. Or just hang in there, you'll be fine. We don't have to have those very uncomfortable conversations because I heard this from a friend of mine, and Tracy says, I want to be in the I know business versus the I think business.
I love that.
You can take it. Anybody that's listening can take that and run with it. We're in the I know business versus the I think business. And how do we say that? And so I'm going to go back to, we're at Cal College's Circle of Wealth.
Or I hope.
I hope, that's even better, right? I hope business. That's not a great way to plan. Part of that conversation from stage was they're trying to position this idea of indexed universal life. And you and I were having this discussion. I was glad to hear him up on stage, even though I'm not a fan of that product. But what it helped me understand is the clarification of what we do.
Right.
And what I mean by that, and I'll get your take here in a second, is they're up there trying to compete with the 401ks, and they're trying to be on a playground that, quite frankly, I don't think they should be on. Our playground, there's nobody else on there. And what I mean by that is we have guaranteed death benefit. Guaranteed. Unless the client does something to mess it up, it's guaranteed. We have guaranteed increases in cash values. And we have fixed guaranteed premiums. Now, that might not sound sexy, but when you bring that kind of certainty to a plan and to a discussion, then everything else leaves. When there's none. There's not one other product I've found that can actually do all three of those. And so what I took from that, because I think there's some people that are very strong in the whole life business, they saw that I'm like, why are they promoting this idea of IUL, which brings a lot of uncertainty, right? There could be a different death benefit, the premium can change, and the cash value doesn't necessarily go up. It can actually go backwards on a year-to-year basis. It's kind of all the things that whole life does, it does the opposite. It could do the opposite.
Right.
And I loved the fact that we were able to differentiate at that time. And so that's why I loved hearing what that guy had to say on stage. It made me more convicted on what we're talking about. I'll let you run with that.
So I was annoyed. Okay, great. So I always tell people there's two schools of thought in finance, right? There's what we call the accumulation theory, right? Buy and hold, dollar cost average, get out of debt, buy term investor difference. And it's built around chasing rates of return. And the stock market is the center of the universe, right? Mm-hmm. And so what I hear when advisors feature that, they're still stuck in the accumulation theory, chasing returns, Monte Carlo simulations. They're all in that camp. And then there's what I call the velocity method, which is what corporations do. This is what the insurance company actually do, right? This is what rich people actually do, which is they focus on velocity of money, right?
Mm-hmm.
So whole life gives you velocity through simultaneous use, right? So you can make $1 do 4 or 5 jobs. That's just in using the product, right? I have a bias towards certainty. I think there's an economic value in certainty because there's no product as made that it in and of itself is going to take you to glory financially.
Yeah.
None, right?
None.
So you're looking, your number one asset is you, right? So I tell people, look, all I want you to do, because the what I call the velocity method, velocity, cash flow, leverage, risk management, right? And so what happens is if you take that works in personal finance. So now we make the foundation, we have this thing in that presentation called the wealth creator, right? So the wealth creator, we want to build, what if we could put you in a program that every year that we could guarantee that you're going to be better off than you were the year before, the wealth creator versus the debtor, the saver. You could be the wealth creator. And now you layer on, you're a business owner, you're a real estate investor. And every year I can guarantee your personal economy is going to get stronger. You're going to have more access to capital. You're going to have a tax-free death benefit when you pass away, right? Because last time I checked, nobody gets out of here alive. And so all of that, because what happens is they look for the product to win. So they're trying to compete against 401ks, right?
Yeah.
So you're trying to the strength of the insurance industry is that they manage risk. So it's like a really conservative bond fund. That's what they're good at. You want to guarantee what you want to have happen. You give it to the insurance industry to manage, right? So now you want to take them. So I'm chasing the up to the market without the downside risk that I can't control, right? I'd rather get dividends because I don't know how you can make more money than the company makes. So I'd rather partner with a company, right? I'd rather bet on actuarial science
instead of the hope science.
Yeah, hope. Hope is not a good strategy, right? So I hope it works. Because it might work, but you got to babysit it, right? And then you got all these spreadsheet warriors. Well, I can get this and internal rate of return, and you backdate. This is what I can't stand. So you bet. I'm looking at the 20-year performance. What does that mean? That doesn't mean anything. It's like now you see why
Get you worked up, man.
Past performance is no guarantee of future performance. Then what are we talking about? Because really, if you've got access to see what because the illustrations are boring. It's boring because it's a saving strategy, right? It's not an investment strategy. So you can't compare. You got to compare apples to apples. So apples to apples is, what is the savings vehicle? Savings accounts or money market accounts, CDs.
Yeah, which brings you really just two benefits, right? They bring you liquidity and somewhat safety. I would say safety. I'm not. Let's not argue that point. Let's give them that. Okay, they got safety and they got liquidity. What are the benefits that those type of instruments bring people? Zero. Do they bring a guaranteed increase in cash every year?
No.
Do they bring a death benefit? Last time somebody died with $30,000 in their savings, do they get $500 million delivered by the insurance company?
Nope. You don't get uninterrupted compounding.
Nope.
People say, "Oh, I got this. I got money in this high yield account. I'm getting 4.5%." Okay, so this is how I'll use the rule of 72. So you take your interest rate divided by 72. It tells you how long it takes your money to double. So 4 goes in 72 18 times. Okay, so it takes 18 years for your money to double. Okay, but if you need the money and you drain the tank, as you say, or you take it out, how much money is the money earning when it's not in there?
No matter what the rate is, it's zero.
No matter what the rate is. Compound interest works best over time, uninterrupted. Right.
Yep.
So now you can collateralize. We call it building your collateral capacity, borrowing against, not from your properly structured dividend paying whole life policy. Now you can borrow against it, borrow the insurance company's money, not your own money. Right. And then your money's still in there working. And then you can because see, what an illustration doesn't show is the cash on cash return you got on this duplex you just bought.
Yeah. I call that the external rate of return. Everybody's focused on the crumbs, which I call the internal rate of return. I hear this all the time. Hey, what's the internal rate of return? Well, hey, it's this, but is that really for a business person, especially if you think about from a business person? If I'm in business and let's say I'm selling widgets, whatever widgets are, and I'm making 20 to 30% return on my equity, return on my money, that's the external rate of return of the policy. And if I can borrow from the policy, from the insurance company using my policy as collateral, I bring that money in and I can get 20% rate of return and my money still stays where it's at in compounds. And so I got to pay the insurance company a little bit of interest. But who cares? Because my rate of return is much greater than what that interest is.
With low risk, right? Because so like I'll teach the 3 rules of investing, right? Invest in what you know, invest in what you can control or influence the outcome of, or creates cash flow, and don't chase returns.
Yeah.
Right. So most people, even IUL, you're still chasing returns. The way it's sold anyway, right? And so, but I understand my business. So if I can put $1 in marketing and make $2, that's 100%. So I'd rather invest in what I know. If you're a real estate investor, it's a saying I got from Dan Sullivan, you want to increase your ceiling of complexity. So right, as your knowledge goes up, your risk comes down, right? So you actually get better at the thing. So I tell people, look, all I want to do is, I'm the defensive coordinator, right? So your business coach, your real estate guru, that's offense, right? I don't do offense, right? I'm defense. I'll make sure your butt don't lose money. I'm going to make you more efficient, right? And give you access to capital. So when you see something you like, all I want to do is make sure you have the money to do it, and to get in something that you understand, that you control, that you can make money, and then you can collateralize it. And from the profits, you pay your policy back with interest, be an honest banker. And then that's the thing. Slow and steady wins the race.
And there's only one product that's perfectly positioned to do that. It's not IUL. It's not VUL. Those products are just products and they might have a purpose, but the only product
I haven't figured out what they are yet, though.
Again, I'm just saying maybe. I'm always that guy that says there might be a purpose, so I'm not going to say there's not.
See, we're trying to be nice because when we go to events, most like insurance events, most of the people there are doing IUL, right? But also most of them are assets under management people, so their whole worldview is the yellow tank, right, or the investment tank. So then that makes sense because you already love the market.
And the way I position, and again, whole life is the only one that gives you that guarantee that money's going to be there when you need it to grow your business.
Right
now, from the standpoint of what is whole life, I've done a couple of podcasts on that. People can go back and listen. But technically, all whole life is a professionally managed bond and real estate portfolio that's done at an institutional level, guaranteed never to go backwards.
Right.
That you have guaranteed line of credit to. So let me repeat that. It is a professionally managed bond and real estate portfolio, professionally managed, which is huge, right? I don't have to try and manage it myself. Somebody else at a very high level is doing it. That, oh, by the way, these companies have been around 100, 150, 200 years. They never lose money, by the way. Did I ever tell you that? There's 2 rules in insurance. There's no deals in the insurance industry, and insurance companies always make money.
Always make money? Yeah.
So
let me bet on them, right?
So. That's exactly right. We bet on them. So again, professionally managed a bond and real estate portfolio done at this institutional level. They get much better deals than you and I do, by the way. Just if you haven't heard that before.
They think at 100-year time blocks.
Yeah.
So they're not chasing because they don't have stockholders to appease to.
Yeah.
In chasing quarterly profits, short-term thinking that most of these regular executives think about.
Yeah, exactly. Guaranteed never to go backwards. I mean, think about that. Every dollar that goes in, that's once the dividend is declared and paid, that becomes your new guarantee. It's like there's locks. Once that's there, it's locked.
Yeah.
And once the new ceiling's set, it's locked. It's never going to go backwards. And it's actually guaranteed to go up. Even if there's no dividend, it's guaranteed to go up. So I look at that. That's why I think that this product is the only product that's perfectly positioned to be that product, to be your warehouse. It is your cornerstone of, and it has to be in the right sequence. It's like when you're building a house, you have to build the foundation first before you build the structure and the roof.
Right.
And everybody wants to render the roof, but they need the structure. And that's the proper sequence of having a great savings habits, having a place, an environment you can store your dollars that's safe and guaranteed and liquid, has all the things we just talked about, and then start building the walls and building. If you want to buy your stocks, I told somebody the other day, I said, I'm not against buying stocks. I just want to make sure you have the right sequence.
Right.
When you can't afford to lose that stock, you can't afford not to have access to that money. Let's not buy that, because ultimately it's going to put you in a terrible position.
I'm not against stocks. I'm against you not knowing what you're doing. Okay.
Yes.
Right. Because you're violating my 3 rules. Invest in what you know. You're buying it because you heard it was good.
Yeah.
You're buying it because you saw something on CNBC, but you haven't looked at the portfolio, or even with your funds. Most people couldn't name the fund manager.
Yeah. Or the stocks that they hold.
That they own inside the thing. So that by definition, so this is what I do, Wade. So I'll say, look, all right, I want to invest. I was like, let's define that so that we make sure we're talking about the same thing, right? Yeah. So, and then I'll pull up a quote I have from Benjamin Graham. I say, have you heard of Benjamin Graham? No. I said, well, have you heard of Warren Buffett? Yes. Well, this was his mentor, right? Yeah. And I have a quote from his book, The Intelligent Investor. I said, investment is something that in which upon thorough analysis that you put your money into where you have a safety of principle and a reasonable opportunity to make a profit. Anything not meeting this definition is speculative. So now let's hold that up to what most people out there are taught to do.
Yeah, because they're all speculators.
They're all speculating. And I don't have a problem with you speculating. Just know you're speculating, which you don't. And don't speculate like 90% of your damn money. Which you are.
100%. So, oh man, we'll do a whole separate podcast just on investing and what investing is and isn't. That's a whole other conversation we can have. I did want to run into a couple of things that I know you're passionate about. Now, you're passionate about a lot of stuff. I can see that. If people can't hear that, man, you got to see Curtis. You got to, and you actually have, going on just a little bit, but I want to talk a little bit about how do we use this idea of IBC in business?
Okay.
Because I know that's a passion of yours, and I was just telling you, so we're building on a module right now just to present this to people, because this is so powerful in the business setting. I mean, it's powerful in the individual setting and what I call the legacy creation setting as well. Because, again, a family is a business, if you know it or not, right? So it's this closed system that we want to create. If you can have a closed family business, that's exactly what the Rockefellers have done. So we talk about that book quite a bit in our conversations as well. What would the Rockefellers do? But from a business standpoint, let's talk about that real quick. You have conversation with your business clients, right? You have business owner clients. I have business owner clients. We talk to them quite a bit. And the whole idea is, what are we doing to help them, A, identify risk, B, say, do we have a system or a process to get rid of that risk? Because typically what kills a business is the blind spot that they don't know what's going on.
Right.
And then how do we offload it? Who can we offload that to? And can we apply the IBC concept to that same process? So that's a lot there. And I know we probably don't have a lot of time, but let's just talk about that real quick. And I just want your take on, when you talk to clients, how do you position that? How do you get them to see that, hey, there's a way that we can solve problems and have you do multiple things with your money at the same time?
Yeah, I start with what I call the principle. So a little bit of like profit first, but you got to pay yourself first, right? You got to save, right? First principle is save. I teach 15, 20% of your gross revenue, right? Because where do you store your cash? Because so what people do is they don't value liquidity. So they don't have enough money. So they never have access to capital. So number one is you got to have access to capital, because stuff happens. Something's going to happen, right? And so you're going to have seasonal ups and downs. You've got payrolls, because regular people, see, business is different, because regular people, one time I got into this discussion, let's call it that.
Animated discussion.
Right. With somebody was running for like lieutenant governor, like Delaware. I spoke at this Chamber of Commerce thing, and she was talking about minimum wage, which is another trigger. You want to see me go off to start talking about the merits of minimum wage law, right? And so she says that. I said, you think money comes from some magic direct deposit machine out the sky? That's where this stuff and that you're talking about, this nonsense you're talking about, I think I said. So, and I said, somebody has to sell something. So you've not experienced looking at your accounts. You got a payroll on Friday and you're looking at your accounts Wednesday, making sure that the anxiety of signing in front of that check, making sure that, okay, that's there, or you got to get a line of credit, because if you're short because the revenue doesn't come in, your people still have to get paid, right? And so you finance everything you buy. So what if you had, because you need money for emergencies, for opportunities, right? And so if money comes in, where do you store your capital, right? That's safe, we have access. So I really talk about that because I believe your number one asset is you, right? So what do you invest in? Mindset, skill set, network. And your number one investment is the business. What do you invest in? Marketing, sales, systems, people. Right. And so now, because typical financial advice teaches you to send money away from your business, a one-way trip, cash balance plans, SEPs, solo 401ks, God help you. And so, I can borrow against my solo 401k. Okay, but it has strings attached to that, right? And so, but it's sending it away from you on a one-way trip for something you can't touch, to some fund manager you never met, and you can't tell how they make the money. You're doing it because everybody else is doing it. But you're different. You can't take employee advice for business owners. It's literally toxic for you. So you need access to your capital, because if you invest in your marketing, I invested, and I make sure I set aside enough money to pay a VA. That VA in the first 3 months, like literally just working unconverted leads and getting paperwork out, man, almost double my daggone business. You know what I mean? So where can you do that? Like what? So people don't see their business as a little. I remember Jay Abraham said, you see your business like a little hedge fund, right? Where you can pull different levers, and we don't look at where's the. I was on a study group with this guy. It was this book called Exodology, and the question he asked is, "Where's the $1 million in your business?"
That's a great question.
You know what I mean? Because it's like what we do is we want to help people become more efficient, find money they're losing unknowingly on them, right? So step one is pay yourself first. Step two is get more efficient so you have even more capital. And then you got to work on your marketing. And I teach a process called hidden marketing assets. And there's like 4 things you could do to grow your business 30, 50% without spending a dime on advertising, with all this stuff. Because people are trying to sell what I call sell you media. Right. And if you've been in business 2 or 3 years, you have a lot of assets already in your business, but you're so busy making the donuts, you don't see it. So a lot of times having that cushion allows you to pull a step back. It allows you to access capital and start to invest in what you already have going on. Hope that was a long-winded answer, but I hope that was helpful.
No, it was really helpful. And there's something you said there that I want to bring back up. And I have a lot of clients that are W-2 employees. You know, you think back to Robert Kiyosaki, right? We want to move from S to I, or
S to E to S to B to I. Yeah.
Right. So you think about that, but what you said was the advice that would be given to a W-2 employee cannot be the advice that a business owner takes. Think about that for 1 second. Why? Because they're under different constraints. It's an outflow at payday for a business owner. It's an inflow for a W-2 employee at payday, right? So just think about that. What kind of advice? Are we taking common advice for the general public as a business owner? And think about how indoctrinated we've been in that because what you said there is so huge, is that it's almost counterintuitive. It's like what's being told to the W-2 employee that wants to stay a W-2 employee. Our clients are typically those that want to get out of being a W-2 employee, or a very high level. They want to be a high level W-2 employee of their own business, right? So I think about that from the standpoint is like, man, the advice that has to be garnered from that conversation, and that doesn't happen everywhere. There's a lot of people that have canned advice that will give it to anybody that will listen. You know, there's a lot of people on the talk show, radio, that give very canned advice to people that don't understand what the ramifications are. So,
and that those people that or the person we may be thinking about, the business that they're really in is business and real estate. That's why they're a millionaire. So let's talk about that, because that's what you do, right? And you don't handle 12% mutual fund. So, right. So, and here's the other thing. So even because you should see yourself, even as an employee, as in business for yourself,
100%.
But you know what I mean? But to see, the key is if you cut open business owners, what do they want? Liquidity, use, and control, right? And so, and your goal is to become financially, it's not retirement. See, that drives me crazy too, right? Retire from what? If you love what you're doing, your business works, why would you retire from that? Okay. But retirement is an age, but financial freedom is the goal, is a capability, right? Meaning that you want passive income greater than your expenses, or twice your expenses, right? Or more, or whatever. And so I think as a business owner, that's what you need to be focusing on. And so what you'll do is, I was just talking to somebody today, we're putting like 25 grand a year, 23,000, 23,000 in a, I met this person at a real estate conference. I said, how does doing this help you do that? Because all I see is you writing a $25,000 check, so you ain't got to write a $4,000 check. Or something like that, right? And tying money up for the next 15 years where you can't do anything with it and putting it at risk. And your business, your real estate makes more money than those things. And you understand it and you control it. See, if you just think about it, because you can trigger me now. So what are the rules of the financial institutions, right? That govern all financial institutions' advice.
Get money on a regular basis and get it as often as quick as you can.
That's right. They want your money. They want it on a regular basis. They want to keep it as long as possible.
Yeah.
And when do they want to give it back?
Never.
Right? So you want cash flow, but that's not their goal. Is Kiyosaki would say, like his book Fake, their goal is not to make you rich, right? And it's assets under management. So I'm not throwing them under the bus, but they've got an agenda. And if you don't have an agenda, you're going to be part of their agenda, right? And so you want to save money, build capital so that you can buy or build assets that generate cash flow for you. So, because income follows assets.
Yep. You and I can go on for hours. One thing, I want to bring this back up. One thing that is so true that you said that I don't think I was real clear on. If you're each W-2 employee, each person has to run their life like a business. And I don't mean, but you have to run it like a business. You have to say, what's in it for me? What's my purpose? Does this serve me? That's really what businesses are in business to stay in business, right?
Right.
That's ultimately at the end of the day. Well, as employees, we also have to have that same thought process. Does working for this company serve my purpose? And Nelson hit the nail on the head in the book, Becoming Your Own Banker, the infinite banking concept. He says, we're in two businesses. We're in that business, but if we choose to be, we're going to run our own banking business or we're going to give it to somebody else. So the question is, do you want to be part of that? And that's the real key. And that's the point I was trying to talk about is like, I have a lot of clients of W-2 employees, but they know that they can control that second part of the business.
Right.
If they take control of the banking function of their lives, they become the business banker in their life. And quite frankly, if they grow big enough, they can become the business banker in a lot of other people's lives too. That's when
they don't see that. What I've been trying to get better at this conversation is you want to see, because I'll show the slide. Nelson says, look, you got to be in two businesses, the one that gives you a paycheck and the banking business, right? Yeah. And so, but you've got to see the banking business. I said, listen, I'll show them, here's how Bank of America works, for example, or here are the players in the play, the saver, the banker, the borrower, right? Yeah. And so how can you marry into the family? Like, how can you replicate that process within your personal economy? And now, even if you have a job, that's your source of revenue, right? But what business is your money in? When the money hits your account, what business is it in the banking business? Is it in a real estate business? Is it both? Yeah. And you know what I mean? It should be both.
Yeah. And then you want that business to be the most profitable of all your businesses. If you're selling widgets or whatever you're doing, that banking business should be the quietest, should have the least amount of noise in your life, and it should be the most profitable. If you really understand, because that's simple business. There's a guy that we both know. He says it's better to own the note, right? You make more money owning the note. And when I first heard that, I'm like, what the heck's he talking about? Right? Owning the note. But what I quickly kind of understand is like those people that finance, the people that control the financing always win.
Yeah.
And so why are we putting ourselves and why aren't we helping our clients, empowering our clients to be in that position of owning the note on themselves and in the future?
Too many people see it. Maybe you come across this and as a bill, and the premium, they resent that you got to pay it back because it enforces discipline. Yeah. Or they're afraid to capitalize. I've struggled with that, especially when I first started learning about it. I can't afford this. And I don't, because I'm thinking, as I'm talking about this, I'm telling myself, because I'm like, all right, am I good at getting people to understand this is a second business? And a bank, what does Alan Smith say? A bank can't make a loan until it has a deposit. So you gotta fund it. You have to capitalize.
100%. People that I say there's probably two different areas, right? So the first area of people that kind of get it, but it's like anything else. I've explained it this way. It's like it's hard to explain what it's like to be chased by a bear until you've been chased by a bear. It's hard to explain this to somebody until they've actually experienced it. Yeah. I've experienced it. You experienced it. We all start probably with this idea that we're afraid of premium.
Yeah.
But you think about the real estate investor. Are they afraid of a mortgage payment? Absolutely not. They should have. I mean, Robert Kiyosaki talks about this all the time. He says, I embrace the idea that I'm in debt.
Right.
Because he knows that debt is growing his wealth. Right? So it's the same idea, right? Premium is what we've been conditioned to believe is an expense, when in all reality, we should see that as an asset.
Premium is what do you say? Premium is a solution, not the problem.
That's exactly right.
Because, well, like I remember talking to Nelson, and this is like, so I've read the book 5-6 times by then, and we talked about Tim Ure. So Tim had him, we're in Pennsylvania, had him up to Wilkesboro. It was like a 3.5 hour drive for me. But I was like, all right, it's close enough. I got to be here, right? So Tim let me come, and he went over the not equipment financing, where the reason for the thing, he had half of the rates change, $500,000 of debt, and he said I had to rearrange my life so that I could pay $100,000 a year in premium, so he could accumulate enough capital so he could get rid of the snakes and dragons. And that is the first, it hit me. It's like, wait, because most people go, oh, I got this other stuff. I can't pay for this expensive insurance.
Yeah.
And I had just got that. I mean, okay. He rearranged stuff so he could put more money in, not less, so he could, and that's.
Yeah, it's so true. But that idea of, again, it's where I see typical financial advisors, they want to come and say, hey, just save $50 a month, put it away. They don't want people to rearrange their thought process.
Right.
Where you and I think sometimes we struggle, but it has to happen. And that's why Nelson's book, the first third of that book, talks about the human problem and about our psyche and how we think of stuff. That's what we need people to understand. Is like, you got to get control of yourself before you can get control of your finances.
Yes.
And that's sometimes very difficult to do. And it's uncomfortable. It's a tough conversation. So some people say, well, if this is so great, why isn't everybody doing it? I'm like, because a lot of people don't want to get uncomfortable. They don't want to change that human equation.
They don't want discipline.
They don't want, It takes, I always tell people in all my presentations, I'll say, here's what I call there's always the give and take, right? I'm giving you all this great information. What's the take? Everybody's waiting for that next shoe drop. You got to do this. I said, there's 3 things that make this happen. It takes time, money, and discipline. So if you're looking for what the downside is, it takes time, money, and discipline. If you can't do those, then continue on your current path.
Yeah, I mean, because to get good at anything, we always say, like we talk about investing is about becoming something. It's not about buying something, right? And so most people so it's like be, then do, then have, right? But being takes discipline. Being takes time. Being takes work. And so we have this microwave thing. Just tell me what to do. Can I buy this stock? Can I buy this? Can I get an instant return? I was watching. I was on some podcast, and guy was like, "Yeah, I told y'all about Eli Lilly, and it went up, and I made y'all money." And I was thinking, did you make them money? Because it was up right up until it's not. Right. So it's an illusion, because stocks don't compound. They go up, they go down. Right. And so their work, whatever the net asset value is that day or at the close of the business day. And the only way to gain, unless you have a margin account, the only way to access your capital is to sell a share. So now you got to what we call drain the tank. Yeah. And so I'm not saying you don't do that, but even if people, I'll tell you love equities, as a business owner, you need a volatility buffer, right?
But that's powerful, because Nelson's book, we've had this discussion in our office many times. We think the most powerful word in becoming your own banker is becoming.
Becoming.
Yeah. Mm-hmm. So exactly what you said. And because everybody focuses on the banker part of it, but it's becoming. What do we have to become? Who do we have to become in order to make this, viable, to make this for us?
Because people call me, I want to do whole life so I can create wealth. It's not. It's more of a wealth preservation, money management tool. You have to become the person that's going to create wealth, right? I hate to break it to you. There's no product that's going to do that for you. But that's not sexy.
No, it's not sexy, but it's all the work before the work. You take a look at we just recently watched the Super Bowl. Maybe you did or didn't, but I think everybody in America at least watches at least a little snippet of it.
Yeah.
Those athletes out there just don't show up one day and say, hey, I'm going to go be a receiver, or I'm going to go be a quarterback. I'm going to be a linebacker, whatever it is. How much work do they have to do? How much work before the work, right? They look at the game as the work, and in all reality, the game is the reward. And that's the same thing we're talking about here, right? So it's like there's works that need to be done. It has to be done internally. It has to be done between our ears. And then it's like, then we have to have a vision, and we have to like understand and look for that person that can empower us, not do it for us. We don't want the microwave strategy. We want somebody that can, be that Sherpa, right? Be the person that carry the baggage up the hill, but you still have to get up the hill yourself. We
Right.
can't carry you. So
that's why I'm your financial Sherpa, right? I'm the guide, right? Because it's still your money. Like I tell people, look, I'm Yoda, you're Luke, right? And so I'm just letting you know now the Force exists, but you still have to go through the trials to become a Jedi.
yeah,
right? So
exactly right. So
for the all nerds, Star Wars nerds like me,
I get the reference right away, so I appreciate
Yeah.
it. So, well, hey Curtis, I know this. We could talk for an hour. We could talk. Well, we've done this.
We talk for an hour. Yeah.
hours. But I appreciate you being on our podcast. Is there anything that you want to leave with the listeners?
Go to check the show notes. I'm going to send it to you because I don't have a good title that y'all going to find it. But I just did one of my favorite books is The Richest Man in Babylon.
Love it.
So I created a little mini course called the 7 Cures for an Empty Bank Account. 7
Cures for an Empty Bank Account. I can't imagine it starts with paying yourself first.
It absolutely does. So all I've done, like a lot of people, here's the funny thing is, it's such a powerful book. It's really written about insurance if you really break it down, right? And then, but it's timeless, right? So principles drive strategy. IBC is a strategy. So I'm giving you some principles, but a lot of times people miss it because it's written in like King James prose.
Right.
So I'm trying to say it in like contemporary language. Budget thy expenses, manage your cash flow, say all it means. Right? Make thy goal multiply, create velocity, take your savings and buy things that make more money and ensure future income, buy assets that pay you cash flow. So I try to like talk it and then translate it into usable stuff. You can write on the little report and keep your notes on the little thing I give you. So it could be a useful tool.
Well, thanks. I appreciate that. We'll include it in the show notes and then people can look if they want to watch you, or I know you got a great website. What is your website?
practicalwealth.net. I'll give you that too, but it's called practicalwealth.net. And it links to all of our YouTube content, our podcast, the interviews we've been on, my recommended reading list. All that stuff is in all the madness that is Curtis.
So this is what I love about Curtis. This is what I love about our community is like, this is abundance thinking in the greatest sense, right? I want my people, those people that are working with me, hearing me, maybe want to work with me. I want them to go watch what Curtis's stuff is. Because if you're seeing what Curtis is doing is similar to what I'm doing, it's creating this community. That's what we're about. We're about growing a community that's looking for this true financial freedom. Not
because we don't want you to hear, why haven't I heard this before?
Right.
So we don't want to both be out there like John the Baptist in the wilderness.
John the Baptist in downtown New York, right?
Right. So that you're hearing it, and we may have a little bit different style, but we both philosophically it's the same. So what do you resonate with? Sometimes I'll say something you'll hear. He said a couple of things I wrote down that, okay, I could say this a little bit better, a little bit clearer. And you can't hear this stuff too much. Nelson would say, the more you see, the more you see you didn't see.
Boy, isn't that it, right there? That is the truth, right? And I heard it said this one time, it's like you could cross the same river twice or multiple times, but you're never in the same position in that river. Because now it's like, I didn't notice that rock, or I didn't notice that investor rock. Because your life is different. You're hearing things differently. So
your level is different. You've had different business experience. So every time you read it, you're different. So it reads differently. Like if you went back, if y'all read Rich Dad Poor Dad, and you've been trying stuff, you'll see it differently. Because most people read it goes, well, rich people don't work for money. And they just go right by that. That's not what that means. Okay. That means they take earned income to buy assets. It also means there's 3 types of income, earned, passive, and portfolio, and they don't want to work for earned income because that's the highest tax. Right. I mean, so even that little thing is deeper, and that I didn't get that till like the 3rd reading. Oh, okay.
Because you had a little experience going with it, right? So
yes.
I'm like, I get that now because I looked at my tax. I have 3 different types of income. But as soon as you can apply it to yourself, then it becomes real. So.
Right. And then it's like, okay, well, I need to lower this income because this is what Uncle Sam is. I need to buy an apartment building or something.
He's not encouraging. He's encouraging me.
Right.
Yeah. So, hey, man, I really appreciate your time. Thanks so much. We will do it again, and we'll do it again, and we'll do it again until we run out of things to talk about, which will be never.
Which never.
You and I both love to talk. So.
Right.
All right. Well, everybody, thank you for joining us on the podcast. Look for Curtis's stuff in the show notes. And if you happen to hop onto YouTube, watch Curtis's stuff, give it a shout out, give it a thumbs up. The more recognition, the more people can see this, the better off everybody's going to be. So let's build that community that Nelson was looking for. Thank you.
Yes, sir. Thank you.
If you're enjoying this podcast or know anyone else that might be interested, please be sure to hit the subscribe button and please leave a review. This will help this podcast reach and help more people by ranking higher in searches and ultimately help more people get out of financial bondage. And don't be afraid to share this podcast with your friends and family, as we can be easily found on Apple Podcasts and Spotify.